Welcome to the Twilight Hour. This is the Bond video for the week beginning Monday, August 17. Two-year German market going nowhere fast. Absolutely nowhere fast. We're probably going to have to stand aside for a week. The 5-year market, known as the Bobble, snapped back fairly hard, saved by the 50-week moving average, interestingly enough. And so a degree of caution is warranted. My guess is unless until we get back underneath 115.33, 115.11, 114.90, that they're going to try to push it a little higher. But one needs to be careful of this area up here. And then lastly, in the German complex, which of course is the default curve for the whole of Europe, we'll look at the Bund. And this is quite extraordinary, down, or rather should I say up, down, up, back to back. People are being totally and utterly screwed on this one. No obvious entry point except to say that, well, let's just see whether the market profile gives us a place. Nope, it's that 120, 128 level once again. Perhaps initially for the early part of next week, need to pay attention to this 121.76 level. Once it rallied up, it was pretty much nosebleed territory, no real retracement. The note market came back half a point, the bonds came back smartly, and bunds didn't even react last Friday, so kind of tough to know. Let's turn our attention to something much more interesting though, the US markets. And this looks like half a profile to me. It looks like we need to drop quite substantially. In terms of yields, were just above 1% on the 2-year. I really don't think that pays enough. Not enough compensation for the risks involved. And so if you do own some 2-year, I would recommend selling them and buying 3-month bills, because I guess you got to own something. I'd rather take the drop in yield for the safety of capital. Market snapped back on the 2-year right to the 50-day moving average, but we've got this confluence, all of these moving averages here. This is possibly where we need to go. A full point down. That's a substantial rise in yields. The 5-year, well, it just looks as if it's traveling between the 50 and the 100-day moving average. Trade the range, 116.22 and 113.31, but any close underneath here is just going to be negative. The 10-year, I suspect we're trading between the 200 and the 50. Sell it up at 119.31, buy it down at 112.10, and then the long bond. Again, we're going sideways now. The problem here is that is the bond actually trying to get a flight to quality type scenario going on versus the stock market? And well, I would say jury is out on the stock market at the moment. We've got option expiry. We'll probably need to get through next week to see where we are. And then, of course, in between time next week, we're going to be announcing the auctions for the following week. We've had the last few auctions, they've done really well to, as soon as the auctions are done, they drive the market higher and then it drives back. And it's quite interesting when you take a look at this, because the auctions are every 2 weeks. So this last week was an auction week. 2 weeks ago was an auction week. They sold it down here. They tried to buy it up here. This they didn't know. This they sold it down. 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 Alright, here they didn't know. Here they didn't know. Here they sold it down. Here they didn't know. Here they sold it down. So there's more sell downs rather than drive up. I think that really the banks, the primary dealers, have been given the nod and the wink by the Fed to do this kind of manipulation so that they can then sell the paper to the Fed for a profit, and of course it helps repair the bank's balance sheets because it helps them make money, obviously. And if 500 million here, 200 million there, a billion somewhere else, they soon actually regain some of their capital losses. But when I see patterns like this, it just means that the bull and the bear are fighting each other. And really, it's quite interesting to see a 10-week moving average sitting here. I don't know, maybe one more little test somewhere up at 120.05. There is potentially a risk to take us up to this 123 level, but I would say if we do go up, then use 119.08, 119.05 as a key pivotal reversal. And if we go down, well, I've talked so much about the levels that go down, below 118.22 gives us probably 117.11 gives us, 117.24. There we go, 117.24 is the level. Of course it is. Sell a close underneath that level.